and Ethereum. We were going to be doing shorts towards the end of the week after the Christmas vacation, because we expected a retraction in Bitcoin down probably to 85,000, maybe even 83,000, maybe more. We were also expecting a retraction in Ethereum all the way down to 2,800s, maybe 2,700s. We would also want to look at Ripple, because probably the easiest to trade and the least risky to trade to the downside is going to be Ripple. So we could have a good sell opportunity after the Christmas vacation in Ripple. We're looking at the weekly chart here. This is, of course, updated to include the action, I believe, as far as early this week, even as far as yesterday. We're looking at the weekly cycles, and we appear to have reached a top out in the weekly cycle. So it just goes an A and a B, an A and a B, and another A. We're now lacking B. Even if this was a bullish market, it would want to consolidate the top. And therefore, we're looking at a retraction back to 50% of the mast, back to 61.8% of the mast. You have, of course, a very strong, this should be a bullish trigger, but at this point, we can consider it's a top out. So previously, Ripple had failed at the top of the cycle, retracted right all the way down to the bottom of the cycle to the moving average. This time, assuming we had a bullish breakout because of Mr. Trump's ascent to power, we're going to retract to 50%, to 61.8%, or even 38.2%. We're looking at selling from current levels or selling a trigger at the current market top, taking it all the way down to 1.7. 1.719 is showing right there. This is, I believe, 61.8, relating here to 1.6826. So we're looking very close to 1.8. It's possible to go lower, but we are not going to risk it. I believe usually a wave 4, if this is what you're looking here, the labels of 1, 2, 3, a 4, any wave 4 should do 61.8 at least. Sometimes, of course, a strong consolidation or strong wave 4 would do 50%, would do 38.2. But let's just go first for 61.8, because there could be a bounce and then we could again attack 50%. So we're going, instead of 1.68, we're going to 1.7, 1.72 is also possible. Let's take a look at now how to take the trigger going into next Thursday the 26th, after the Christmas vacation. I'm looking at the current ascent into leg 3. And this is the 4-hour chart. You can see that leg 3 here. There's been, of course, a 1 and a 2 and a 3. This is segregated into 1 and 2, Roman italic and green, 3 and 4, Roman italic and green, or 5. The market has done an A, has done a B, has done a C. High degree is finished, high degree B is finished. It is either we are saying a double head and we get a break below the moving average. There is another possibility that we are going to get a bounce after the Christmas holidays. We get a bounce to attack the old head levels. This is a wedge. We could get a breakout of the wedge and then failure. So we could go as high as 2.85. There is still potential to, when we check the momentum, you'll find that there is potential to do that bounce. And it's still a leg B. It is just the same market high. At this point, the market is just doing double tops, double heads, right? The trade to take would be failure at the head level, all right? And failure at the head level can probably take us to sell 2.85, can take us even to sell slightly higher or slightly lower. Takes us to 1.7, 1.67 showing right there, 50%, which is a level 3. Possibly to take us to 38.2 if we really have very strong momentum. This is 1.4. 1.39 is really 1.4. Let's take it to internals. So we'll just take a 2-minute recess to stand out of background noise. When we're back, we are going to carry on with the internals and take it live. So please stay tuned. It's just a 2-minute recess. We'll be right back. We're looking, of course, at a wedge, but usually a wedge resolves to a breakout to the upside. In this case, we are looking at a breakout to create a higher head than the shoulder levels. you can see that that leg B, we have it here as complete, as finished. But even if this was going to be the case, we can get an A and a B that will break the high of that leg B. That red B can still break out into 2.8 before we have a retraction all the way down to 1.7. And this is really what we want to trade. Next Sunday, I'm very sorry, next Thursday, this is the day after tomorrow. If you sign that the market has triggered early Asia time, maybe European session, above the 200-point moving average on this 45-minute chart, on the 30-minute chart, on the 1-hour chart, and that there is a trigger on the 15 minutes and on the 30 minutes, we can consider that we had a 1 and a 2, or we had an A and a B, and we're going to get a 5 swing C. We want to buy into LXC. LXC will usually, any LXC anywhere will show traction, will show momentum traction, something like this. This used to be LXC. It is labeled here 3, but of course internally it has 5 swings, and it will have a momentum continuation, whether positive or negative, depending of course on the trend. In this case here, we're looking for a positive momentum continuation and would want to buy it. It becomes easy in a way because the hedge is, or the protection is just below where I'm holding the white arrow at something like 2.11. This is delayed, but it's very close to the current market levels. You'll find that we have a 5-wave swing here. It's an ending diagonal, but still a 5-wave swing, and we have a bounce out of leg A. It will give us the feature of something like an inverted head and shoulder. So we're going probably to be attacking the neckline 2.8 before we fail. If we fail immediately on Thursday, it would mean that this 5 swing move shown in white has completed the correction. It has completed something like an A and a B and a slight C, and that we are really seeing a continuation of this wedge to the downside, and that the wedge has done an A and a B is going to be doing a 5 swing C. And the 5 swing C has leg 1, leg 2, leg 3 is the most strongest, of course. We would take the short. Again, this one goes all the way easily to 1.7, to 1.66 is showing there, 1.75 is showing there. So it works both ways. We can get the trade really to the upside and to the downside. We must go into Thursday unbiased, really unbiased. There doesn't have to be a breakout higher if you do not have a trigger. There can be a breakout lower because we're already seeing movement inside of a wedge, and the next leg to the downside inside of that wedge is just 1.7. But just 1.66 or 1.75 are just these levels that we have here, 1.72. And therefore it is still a flag, and the next leg into the flag just takes us to 1.7. It is possibly, usually a leg 4 or a leg B here in this case will bounce internal level B. So there's an A here, there's an A, B, and something like a 5 swing C into that B. The relevant next bounce is the top of that level 2. All right, so the trigger can come in early Thursday. We don't want to miss it. If we have a degree 3 trigger to the downside, again, momentum traction to the downside, it would mean that this 5-wave structure is finished. We have a rounded A or rounded 1. We have a rounded 2. Leg 1 into rounded 3 or C is a leading diagonal that would have bounced the correction, and then the market is just like a 1, 2, and 3 or A, B, and C, and then we get to leg C to the downside or leg 3 to the downside. It all, of course, depends on momentum leading us to the direction that we're going to be trading if we get to see it next week, early next week. We had the breakout in Ethereum, but we didn't have a breakout anywhere else. So we had a breakout in Ethereum. We'll be investigating that in more detail. We're looking at, of course, 2A, 2B, and we're getting 2C, and we had the trigger here on the 15 minutes. We had the trigger on the 5 minutes. That was Asia time. We didn't work out. So maybe this will have traction, continuation on Thursday, maybe not. Maybe it is just a dud. A dud is something that is deceptive, right? So again, we have to be cautious, but we meant to say that if we have a trigger or the beginnings of a trigger in Bitcoin, maybe it will, in Ethereum, it could show in Bitcoin and in Ripple. It is just a matter of time because, of course, markets are closing down on very thin volatility. But we have a slight positive momentum traction in 30 minutes, so it would mean that maybe the market will resolve, all the crypto assets will resolve to the upside before doing that correction. Let's move to Ripple first. So this is the same 45-minute chart that we were looking at. Let's check it here again. You find that there's very little movement. It would look like we're doing some kind of a leading diagonal, and it is still there. Some kind of a leading diagonal. Have we broken out of the leading diagonal? Not on this kind of momentum, of course. We have not at all. It could be, yes, I could throw this as a leading diagonal, but I could enlarge it, and it is still the same leading diagonal, just mere speculation. And we don't want to trade speculation. We have to trade confirmation. Even if it takes time to confirm, remember we are on very thin markets, and these are not normal market conditions, not normal tradable market conditions. So I was saying we could have this. If we have a trigger, we're broken out of this leading diagonal. But if we did not have a trigger, lengthy leading diagonal that ultimately again breaks to the downside. So we have to wait for the trigger. This is not, of course, a trigger on the 45 minutes. It's not showing on the 30 minutes. It depends on what you want to see. Can we get it just before end of half day today? Remember, the market is going to close in about 3.5 hours time, to be exact. Can we get a trigger before then? And should we take it if we get it? We may get it before then, and I would consider to play safe and stand out. It could be a fake again. If we use a very small size and take it into the Christmas vacation, maybe it is manageable towards the end of the week. Towards the end of the week after the Christmas vacation, that is. So it's really everyone and the risk and the comfortable risk perspectives. We should not be set off by negative momentum on the 5 and 15 minutes. Usually we are in a triangular configuration. You want to buy negative momentum, but we will wait for a trigger, and the most suitable is going to be Thursday, really. There could be a trigger on the 15 minutes. That doesn't seem to be anything on the 5. We haven't done, of course, the correction, but it all adds up into, if we're getting the C to the upside. So it looks like something like an A and a B and a 5 swing C. That B, if we move higher, is going to 2.7. It's going to be a clear bullish trigger of a wave C that does 5 swings. At some point, once we have positive momentum on the 5 and 15, we already have positive momentum on the 15 minutes. Once we are back to something like this on the 5 minutes, it becomes clear that there's been a leg 1 and a 2, a leg 3, all the way up here, a leg 4. We're just going by the momentum pitch. So this is actually leg 3, this is leg 4, leg 5. We have 5 swings. If we break higher on positive momentum on this 15 minutes, then we can take the trade, probably Thursday again. And the hedge is 2.13 or even 2.15. The entry at that point is probably going to be 2.3. By that point, of course, we will have been stably above, or will have stabilized above the moving average. All right, let's take it to Ethereum. So again, now if we understand the structure, we hope we'll be able to act Thursday morning. If the market breaks to the downside, you've just seen an A, B, and a C, and of course, a break to the downside. You see here 5 swings. You had an A, you had a B, probably A, B, C somewhere here. Market breaks to the downside. You have to be cautious. Would mean that we're moving in the inside of that wedge that we are looking at on the 45-minute chart. This is comes a very deep move from current levels all the way to 1.4. We are going on the weekly time frame to 1.7. We're looking at 1.8. Let's take a look at the high degree momentum before we leave. So We have positive momentum. No, we don't have positive momentum on the 1 hour. The maximum is just the 30 minutes. This is where we have positivity. Dilute on the 45, nothing on the 2 hours. We have solid negative momentum on the 2 hours, so we could get break to the downside early. We really could get break to the downside early Thursday. The fact that we're below the 200-point moving average is very indicative of continuation. Continuation in the downtrend. This is more inclined towards the target of 1.75 and 1.7. On the 1 hour, we're also below 200-point moving average, so it's more likely that we break to the downside. On the 4 hours, we have degree 3 negative momentum continuation again, and so it's really more likely that we break to the downside. If this occurs, we are looking at double head formation, and first move is really the neckline or level 3. Level 3 here is 1.6, 1.57. The neckline at this point is 1.3. And the only hint that we can have a break to the upside, the only thing that is going for a break to the upside, the momentum picture really says it all that we get the break to the downside. But you want to take into consideration that the market has created a tweezer formation at the 200-point moving average, and the retraction has not really broken 50%. There's been a bounce, looks like a mast and some kind of a flag before the market moves higher. It occurred previously here and the market moved higher. So, but it wasn't on negative momentum like this time around. The fact that it is on negative momentum, if the market moves higher, would mean hidden divergence to the upside. Let's take a look at the daily candle. A very good positive traction, positive momentum still, and therefore we should be getting another leg to the upside actually. Of course, if I take this higher, because I haven't yet we have a pennant. So ultimately, maybe even the market is bullish and we get another rise to 127.2.